I'm feeling generous, so I'm going to tell you every single position that I have that's an investment versus a trade. First one is Coherent Corp. It's the optics manufacturing GOAT. They are the US premier manufacturer of optics, mainly transceivers. They also have industrial lasers that go for $500,000 a pop for some of them. It's run by this guy named Jim Anderson. He's an MIT guy. He's just goated. It is really undervalued. It is the Micron of optics. I think it's going to explode, honestly. Their earnings is February 4th. Momentum is the day before, so that's going to be interesting and a pretty good read through. I think Lumentum's bar is way higher than Coherent's. They're 50% growth. Lumentum goes down. Coherent has 16% growth according to analysts. Like, that's their projection. I think it goes to like 8 or 9%. That's ridiculously stupid. Now, the buy side probably is expecting low 20s. I think it's going to be closer to 40 than 20. Next position is Kaspi. If the Russia-Ukraine war ends, this is a Kazakh fintech. They're also in Turkey. They bought Hepsiburada, or like a majority stake in Hepsiburada. People don't understand, like, Turkey's a really big market. That's why I was in Heps. But they are the most dominant. They're the most dominant fintech in any country in Kazakhstan. 90% of all vendors are on their network. So that, like, kind of pedigree, it's a very innovative company. It's on the NASDAQ. Like, you guys think, it's a Kazakh company. Well, it's trading at a 6.5 PE. So whatever discount you want to apply to it, that's an extremely good, high growth, compounding business that if the Russia-Ukraine war ends, I think it just doubles immediately and then continues to compound at 20% for you. CAGR. JFin is the upstart of China. It is extremely cheap. It's probably going to pay $1.20 of dividends. It's at $7 right now. It's really just overhated. You're getting 20% dividend yield. So I don't know what more you could ask for. XNet is trading at 1/3 book. It has a stake in Arashi Vision, which is like GoPro on steroids, especially for robotics and drones. Like, you need good cameras. They have the best cameras in the world. That stake is worth $18 per share at the current price of $235. 1 point is 300, whatever. That's a $1 billion stake, and XNet right now is a $380 million company, I believe. It's moved around a little bit. $455 million. When they monetize that stake, they're going to buy back or do a special dividend. So, within 6 months, I think this thing doubles. 6-7 months. Rail makes rail cars. It's called Freight Car America, and that's the cheapest way to move materials in the U.S. Like, we're going to have 4 or 5. We already have 4% GDP growth, potentially 5% GDP growth. The amount of, like, the real economy type stocks, I think, are going to do really well. I think rail is great. Their last quarter was outstanding. Their guidance was outstanding. This is the sort of business that, should do really well. I've followed it for a long time. I think it goes to $17. I have to see the next quarter if I reassess that. Right now it's at $11.30. Jack, we actually saw Funko pretty much go berserk the past couple days, and I'm like, God, like what happened here? I missed this. It was kind of under my nose because it's a similar company to Jack. Jack has partnerships with Disney, Sega, Warner Bros. They make, they license their IP and make these cute little toys for kids and Halloween costumes. The past year was a disaster for Jack. If you look at the PE, and the same thing with Coherent. It's like Coherent's PE is super high because of restructuring costs from the 2.6 merger / rename. Jack is a 40 PE based on the worst year that the business could ask for, where they conservatively manage their balance sheet. They didn't order too much inventory, not knowing who's going to eat the cost, and the management is looking forward to 2026, which is a bounce back to 2024 numbers, where it would be a 4.5, 5 PE if we just use 2024 EPS. So, year of Jack, it pays you a 5% dividend to wait. Right now, it's at 19.23. QXO, Brad Jacobs story roll up. Brad Jacobs says, where was he? XPO Logistics. Then before that, he was There was somewhere in between. He was Waste Management to start, and then he went somewhere else. Whatever. Everyone on Wall Street loves Brad Jacobs. They're throwing money at him. He's buying more. He's like he's got the majority of his money in this company. He's a billionaire. And he's the GOAT. So it's really just a management play. Sometimes you got to ride the jockey. And it could easily have tech-like returns without being a tech stock. So that's why I also really like it. ASX, it's really, so the way I have to explain this is like, the chips are getting smaller and smaller. Like the ASML lithography machines are really impressive, but we're going from, 5 nanometer, 4 nanometer, 2 nanometer, and at a certain point, it's like you can't split an atom. That's why the advanced semi manufacturing is really important. ASX, being kind of a smaller market cap company, is like a pretty interesting way to play that. I have it in a bucket with KLA Corp, which is also more exposed to that advanced semi manufacturing. You could replace that with Lam Research. I really like Lam Research because they're most memory exposed as well as probably TPU exposed of all the semi caps. ASML, I don't know. I think it also does well. I mean, they have all ripped to start the year. Oscar Health, disruptible with Teladoc and a massive market. Just seems like it's, disruptible. But the thing is that I don't really see anything in the numbers that is giving me high confidence on those. But it's just like the sort of thing where Congress starts talking about something, they're both up 25%. It goes through, all of a sudden we're looking to cut costs, especially with a bunch of rural boomers in healthcare. Those are the types of businesses that will do really well. The Oscar Health thing, I'm not even really sure if this is a pro or con, but it was started by Jared Kushner's brother. So it should have an end to the Trump organization, but I don't know. I don't even know if that's good long term. Gencor, GENC, they make heavy machinery for road building. It's kind of similar type stock to Rail. They have $130 million of cash and equivalents. What's the market cap now at 14 bucks? 207. So, 2/3 of their entire business is in cash. They probably have another $30-40 million in property, $10 million in inventory. I don't even know. I could look it up, but for the sake of the video, it's basically trading below book value. And it's making, $15-20 million. That could go up to $25 million next year of operating income. So it's a super cheap stock. The 93-year-old CEO founder just retired, passed it on to his son. They got to do something. If I'm a private equity guy, I'm like giga chatting this. I'm like, I'll give you 50% premium, 50% premium to your business. And I'm going to take your cash and then I'm going to lever it up and then slap some debt on top of your business. And basically, it's no risk, honestly. You could just let it go bankrupt if it doesn't work. That's what I would do if I was in private equity. What else? Webtoon. Webtoon is a very interesting platform. I didn't really get it. I looked at the IPO for a client a while ago, and I was like, what the hell is this? It's basically like Substack for anime, comic kind of stuff. Like, I don't know, manga. Like, since I've researched it, I kind of like forget. But basically, it's growing pretty well. Last quarter was horrendous, so it's really cheap. Now, it's cheaper than the IPO price. If you want to compare this to any software platform, Webtoon is cheaper for sure. Less than 2 times sales at this point in time. And if you can get, 20% net margins out of that, you're looking at an extremely cheap PE. And it's growing. It's got a lot of growth opportunities. You just got to look past the last quarter. CMI, Cummins, I made some videos on here. They make truck engines, diesel engines. They can make, take production there and put it towards these massive megawatt generators that go into data centers. And they're kind of like just number 2 to Caterpillar. And you've seen how Caterpillar trades in that category. They're both vertically integrated, Cummins more so. And it's pretty easy to take a truck engine, put it on the line for generators. And yeah, that should give them pricing power. And it's trading at 2.5, 2.6 times sales now. 10% price increase basically cuts the PE in half. All right, 10-minute is all I got, so I'm just wrapping it up there. Go to Substack if you want to ask any questions on these.